All right, let's dive right into American Eagle's Q3 earnings report. This was a big one, folks. It dropped on December 2nd and immediately lit a fire under the stock. So today, we're going to unpack exactly what happened, why the market loved it so much, and what it really means for this brand going forward.
And I mean, they really loved it. The stock shot up over 10% in after-hours trading. That's not just a good reaction. That's the market screaming that something significant just happened. So the big question is, what was the message? And that really brings us to the heart of it all. Is this American Eagle turnaround for real? Are we seeing a genuine, lasting change in the business? Or is this just a temporary boost from a huge marketing push? Let's get into it.
Okay, first things first, let's look at the headline numbers. This was what we call a classic beat and raise quarter, and that's exactly what gets Wall Street excited. ADO didn't just edge past expectations, they smashed them, and then basically said, get ready for more.
So check this out. On the bottom line, their adjusted earnings per share came in at 53 cents. The street was looking for 43 cents. That's a huge beat, over 23%. And revenue, also strong, hitting a record $1.36 billion. Just clean, solid execution all around.
But what's really interesting is how they got there. It's a tale of two different brands under one roof. You've got Aerie, which is just an absolute powerhouse, posting an incredible 11% in comparable sales growth. That's huge. But, and this is a big but, the main American Eagle brand finally got back to growth, up 1%. That might not sound like a lot, but it is a massive signal that the ship is turning.
Now, it wasn't all perfect. The company's profitability, their gross margin, took a pretty big hit from US-China tariffs. We're talking a $20 million impact. That chopped about 1.5% right off their margins. And you got to keep this in mind, because this little problem is about to get a lot bigger. So, why the great results? Well, this didn't just happen out of nowhere. It's the result of a really smart, aggressive strategy. And it all started with a marketing blitz that has totally changed the conversation around the brand. American Eagle has been absolutely everywhere. They went all in on celebrity and culture. You had the Sweeney campaign for their jeans, a collab with NFL superstar Travis Kelce, and even a holiday push with the one and only Martha Stewart. They are spending money to make sure they are part of the conversation, especially with that all-important Gen Z crowd. And did it work? Oh yeah, this slide says it all. These campaigns generated a mind-blowing 44 times billion media impressions. Let that sink in. That's the kind of reach that doesn't just sell a few pairs of jeans, it fundamentally changes how people see your brand. And you can tell management is feeling confident. The CEO, Jay Schottenstein, said this was a deliberate trend change from decisive steps. The subtext there for investors is pretty clear. This wasn't luck. We did this on purpose, and we think it's here to stay. And they're putting their money where their mouth is, investing way beyond just ads. They're rolling out cool tech like AI virtual try-on tools to make shopping online easier. They're doing these crazy 3D billboards that you can't ignore, and they're remodeling up to 100 stores. This isn't just about creating buzz. It's about building a better business for the long haul. Okay, so let's look ahead. How is all this momentum shaping up for the holidays? Because this next part, their guidance for Q4, is really what poured gasoline on the fire and sent the stock flying.
So here it is. This is the big one. Management didn't just nudge up their forecast for Q4 profits, they blew the roof off it. They went from a high estimate of $130 million to a new range that goes all the way up to $160 million. That is a huge sign of confidence right before the biggest shopping season of the year.
And they're backing it up with a super bullish sales forecast. They're telling investors to expect comparable sales to grow by a massive 8 to 9% in the fourth quarter. That tells you that the momentum from Q3 isn't just holding steady, it's actually getting stronger.
But remember that tariff problem we mentioned? Well, it's about to become a much bigger deal. That $20 million hit from Q3 is expected to more than double in Q4, to about $50 million. This is the biggest cloud on the horizon, and it could definitely put a squeeze on their profits, even if sales are fantastic. Okay, so let's put it all together and figure out what it all means. It's time for the next call, our take on where American Eagle is headed from here. So for their next earnings report, we are absolutely expecting another beat. Aerie is on fire, and that holiday momentum seems undeniable. And because of that, we think this stock keeps climbing, as more and more of Wall Street starts to believe that this turnaround story is the real deal.
Look, the bull case here is pretty straightforward. The marketing continues to work, Aerie continues to crush it, and that combined strength is more than enough to overcome any economic weakness. The bear case, it's all about those tariffs getting worse and maybe the core AE brand taking a step back. But honestly, right now, the bull case just has way more evidence behind it.
So, putting it all together, the fantastic Q3 results, the incredible brand momentum from their marketing, and that monster guidance for Q4, we are initiating our rating on American Eagle with a confident outperform. This company is firing on all cylinders in a way we haven't seen in years, and we think this stock has more room to run. And that really leaves us with the big, multi-million-dollar question for the future. Can this amazing marketing momentum drive enough sales to paper over the very real pressure on their margins from tariffs? And can it give them enough breathing room for the main American Eagle brand to go from just being stable to being a real growth engine again? The answer to that is going to write the next chapter for this company.
And as always, this is not financial advice.